Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market continued to balance within a range, and heading into the open, we're going to continue to use the 83 to 85 quarter area as primary support and the short-term bull-bear zone. As long as the buyers can hold ES above 83 to 85 quarter, there's still a chance for a move up into 91 quarter to 92 quarter, and the initial resistance zone at 93 half to 95 half. So for the last 3 days, the market has been balancing in a very defined range, and the bottom of that short-term balance is the initial support zone, and the top of the short-term balance is the initial resistance zone. And we know that eventually the market is going to move outside of that range, but it is in a balanced state until it breaks either above initial resistance or below initial support. Now, in order for the market to break and hold below the initial support zone, we will have to see broad market weakness, a downward trending advanced decline line, and the NYC tick holding below zero. So essentially, we'll have to see real-time signs supporting the idea of a multi-day balance breakdown. If that's happening in real time, and we are seeing that sustained downside momentum, then we want to be careful taking any long setups below 83 to 85 quarter. And a break of that area could very easily lead to a test of 75 to 77, and even 70 to 72 would not really be out of the question. So we could extend down into 75, 77, and 70 to 72. On the upside, the first test of 93 half to 95 half can still technically attract responsive sellers, but we are going to have to watch and see how the market is approaching that area, because a break above 91 quarter to 92 quarter would in itself confirm that the buyers are dominant on the smaller time frames, and depending on how we reach 93 half to 95 half, it may not be an ideal area to short anymore if the market is going up there fairly directionally, or even if it's going up there kind of slowly, but it's very methodical, and there is sustained upside momentum. So even though we can get a reaction at 93 half to 95 half, in order to get a short setup there, the odds of a reaction have to be high, but the reward to risk has to be there too. So that may not be the case next time we approach 93 half to 95 half. So that's something we'll have to again assess in real time. And in the event of a break above initial resistance, that would confirm the buyers in control, and it would bring the 99 to 2301 area into play. Since we are trading at the balance area low, the first test of 99 to 2301 is a high odds area for responsive sellers to be active. So right now, it's really going to be about how the market responds to 83 to 85 quarter. If the buyers are able to hold it there, then like I said, there is potential for a move back up into 91 quarter, 92 quarter, and 93 half to 95 half. And then if we fail at 83 to 85 quarter, then that would be signaling a weaker market, sell side gaining control on the smaller time frames, and in that case, we could be looking at a move quite easily into 75, 77, and potentially 70 to 72. So those are the main ideas heading into the open. Let's see if the buy side can hold ES above initial support, and we'll take it from there.